Guys, I'm going to go ahead and get our webcast turned on so everybody can start jumping in. It takes a little while for everybody that's logged on to actually get into the session. So I will get that going, get myself set up, and we will get rocking and rolling. Hi, Brett from Utah. Good to see your name there. I like seeing who's there. Miss Anna, let's scroll down. I do have my whole team that's going to be on this call just to make sure that, I'm sharing all of my knowledge all the way down. So lots and lots of familiar names. Oh, sorry. It's my reminder that it's 10 o'clock in the morning. And then I have one that goes off at 4 in the afternoon just to try to keep tabs on what time of day it is. Hi, Ronnie. All right. Let's see. It sounds with echo. Is sound an issue? Can anybody post in chat? Especially my team. Does sound okay? Okay. All right. Sounds like it's good for most. I apologize, Mary, if it's not sounding right. I know that in my car echoes, my cell phone echoes in my car really bad. Apparently it's a problem. I need to disconnect and reconnect. Let me get my presentation going. Let's see. Now, PowerPoint was acting up on me just right before this, and I had to close out and reopen it. So fingers crossed it works properly for the rest of this morning. And I have a little funny, so I'll get to it towards the end, but we are going to do a training session for this kind of reporting, and I'm trying to get my professionals lined up. So I've got Erin Valier with Allowable. She did a presentation with me last July when this all came out, and she works in the business development of Allowable, which is an EMR, not Medicare related, so it's on the private duty and non-skilled side. And so she was doing like how you can use your EMR to help you track down and want to calculate lost revenues. And so anyways, I tried to tee her up for our training session last night. She said, okay, well, I need like a couple weeks to prepare for a presentation. I rolled in this morning and updated this presentation, which was last given in November. So I'm kind of a fly by the seat of my pants kind of gal. I didn't spend a lot of time. I've spent a lot of time developing these slides, but it just didn't have to redo it. I don't believe in recreating the wheel. So let's see, where's my clock? All right, it's a few minutes after the hour, so let's just get started. We have a really big group with us today. I welcome everybody, and I wish we could be more interactive because I love talking and hanging out with all of you guys. I'm very excited. If you're not aware yet, and if you're not a TAC member, if you're not in Texas, you're welcome to come anyways. TAC, the Texas Home Care Association, has their first in-person event. It's going to be a split event. It's going to be in person, and they're also going to stream as much of it as they can, right? So it's going to be in person and virtual. But they've had a huge turnout for in person. We're excited. My whole team's going to be there because we're going to try to help staff the event for the Texas Home Care Association. because it's right here in our backyard. It's in Round Rock. It is September, oh shoot, 14, 15, something like that, 13, 14, 15. And anyways, super excited to get out and see everybody again. I'm going to need to wear a warning sign that says, warning, I give hugs, because you're going to have to tell me if you don't want to hug. So just prep yourself for that. Okay, let's get rolling. So what we're going to go over today is that some of you may have gotten, or you should have gotten, and you might have thought it was junk mail, an email from HHS. It's not even HHS, it's the HRSA. You know, I'm honest, I don't even know what that stands for right now. I can look it up. I've got it open on other screens, but they're the ones that are going to manage all of this reporting. And so they send out an email saying, hey, new deadlines, new reporting kind of criteria, and here's how it's going to happen. That's the update we want to give. And I'm going to start with that because I don't want to leave suspense. So I'm going to start with what are the new updates, and then dig into, nothing's new on what's allowed and how you can use the money, but you know, we're continuing to evolve our understanding of that. And so then we'll dig into that on the second half. So again, I really suck at doing introductions because I always forget. I expect everybody knows me. My name is Amy Knight. I am a CPA here in Austin, Texas. I am from Oklahoma. We still have a lot of clients in Oklahoma. This year marks year 19 with the firm down here in Texas. And so next year is the 20th anniversary. I will be throwing a huge party. I'm talking like wedding planner kind of party style. And down here in Austin in July, one of my really good clients does wheat harvest in June. So June is our actual anniversary day. And he said, can we wait till July? I said, sure. So he's out on the tractors right now. I know he is not on this call. So all we do is home health, hospice, nursing homes, assisted living. It's all we do. It's all I know. It's all I've ever done. I just landed there out of college. And so we have been eating, living, breathing this since last April, right? April 10th is when everybody started getting their money. That's when that big first round of payments went out. And we've been deep in it ever since. So I come to you with that experience. I do have this disclaimer. One thing that sets me apart from a lot of my peers, I don't have a problem coming out and saying, okay, as of today, here's what we understand and we know, and here's our understanding of it and our interpretation. And that may change at any given moment. And I'm telling you, last May, June, I might have said something on Monday, and then by Friday it was wrong. And so then I would come back out on Friday and send out another update. So that kind of separates me. CPAs traditionally are very, very conservative. And so when new regulations come out, a lot of times what happens is your local CPAs and those around you will say, you know, we're going to wait for the big guys to figure that out and tell us what it means, do the interpretation, wait for further guidance from the governing bodies and the people that interpret it and write it into law. The FAQs come out. Well, we didn't have time for all of that, right? COVID made everything move at hyperspeed. And so I just wasn't afraid to step out and say, hey, here's what I know today. So with that, put me at a lot of risk. So I say this disclaimer is here to tell you this is not legal advice. A lot of this, what's allowed is still up to interpretation. There is very little solid black and white guidance like there is with the PPP loan. It is very clearly defined what is an allowable cost and what is not. That is not the case with this provider relief fund, okay? And so I just say, I'm giving you what I know. I try to date everything so that if in a week it changes, I can send out an update. So if you want to stay engaged and get those updates, a couple of ways. A, you can visit our website. You'll get a little pop-up to join our mailing list. I do try not to send out a whole lot of spam, and you know, of course, everybody's going to say they try to make their marketing materials relevant, and we do, but it is the best way for me to communicate with the masses because I can't call everybody, even our routine monthly clients. I need you watching those emails. And what we've gone to is I do a lot of video messages. It's just way easier to communicate the message and get you to actually listen versus read a long email. So that's been very well received. And then when we do those video messages, we then post them on our YouTube channel for anybody to view. And so that's another way to stay engaged and stay in the know is if you go to Night CPA Group on YouTube, just search Night CPA Group and then subscribe. And depending on how your alerts and notifications are set up, you will get notified every time we release a new video. All of our webinars go on there for the most part. We try to do the Wednesday webcast, which is the first Wednesday of every month. We have fallen behind on those because busy season got really busy this year. And so they're a little bit on pause till August, although this is in place of one. So I guess I'm back on for this month, but not the first Wednesday. Anyways, so those are great ways to stay connected with us. And also, I will just share with you a little side note that I've learned through having an actual marketing team. If you, and we have lots of dogs in the office and everybody has their things on mute. So that's good because somebody just walked in. I can hear all the dogs barking. I had to kick one out of my office since I wouldn't be able to mute. Anyways, see, that made me lose my train of thought. I will come back to it. Oh, tidbit on marketing. When you get emails from anybody that you like to stay connected to, you don't have to click through, you don't have to go to their website, but you need to just click on the email to stay engaged. The email software will kick you out of the mailing list if you do not engage after 90 days or whatever it is. And that's to help us not spam everybody, right? We want to send information to those that actually click on our email every once in a while and read whatever's there. You don't have to click on any links or anything like that. So oftentimes I get people that say, hey, oh, well, I didn't hear about that update. And I'll look, and it's because you've never engaged with an email, and therefore the system automatically is going to kick you off. So really, you know, what I do is I look through, I use Gmail. So I've got the tabs for primary, promotion, forum, social. On the promotions tab, I will click on it. I happen to love Carihola. It is a bamboo company that sells bamboo, mostly linen, the best sheets on the planet. I'll look at their emails every once in a while because I don't want to miss out on a good sale. So little things like that. It's still in my promotions tab, but I'll click on it every once in a while so I can stay on their mailing list and stay engaged. There are a lot that I don't want to be on the mailing list. And then you can simply unsubscribe. So anyway, diving into our materials. So first thing I want to go over is this reporting updates. Everything that was updated was really specifically with reporting due dates and who has to report. That's what we'll go through in this first section. Part two, then we'll get into the program rules and we'll talk about like what's allowed, what's, you know, how do you justify using these funds, the reporting requirements, like in more detail, auditing, and then also we'll touch on, I'll briefly mention the accounting, tax, and cost reporting, how that plays on those, okay? So feel free to, housekeeping, real quick, feel free to ask questions, but in doing so, please, please, please post them in the questions and answers box because that allows me to really manage it. I can go through, answer each one, mark it complete, and that way I know what's been answered and what hasn't. In chat, things get lost, so I may not be able to answer your question. I am happy to answer any questions that come up. So please feel free. That's why we have 90 minutes. I don't have material for 90 minutes. I'll stay on and answer questions as long as you want. So, and yes, also another good question, Blanca, that I always forget to address. Tomorrow, you will get a follow-up email that says, hey, thanks for joining our webinar. Here are the materials. So you'll get the handouts and you will, and I don't do them in advance because I inevitably find a typo. So I'll fix the typos, put them in the follow-up email, as well as a link to the recording of the video of the webinar. And that is just simply on our YouTube channel. So if you miss it, it's there, you can find it. So the recording will be there, handouts will be there. And then if there's anything else that I feel like we need to attach, it'll all be in that follow-up email. That'll come out tomorrow afternoon. So no worries there. Reporting updates. So they came out and they're now stating that reporting is going to be based upon when you received your money. And so there were various, what they call tranches and distributions. There's the general distribution. There were a whole bunch of targeted distributions. And that gets very boring. And so when you go through thinking about your reporting, there's a couple things you need to know. I mean, this sounds elementary. The date you received the funds, the amount of the funds, and what distribution was it from? I'm going to speak very generally. Most of them were from the general distribution. That was the first round. It hit a lot of Medicare providers saw it on April 10th, not all of them, and then every Friday thereafter. Then tranche 2, I think, or phase 2 was when they brought in a lot of the Medicaid only providers. And then they also said, let's say you had a little bit of Medicare, but you had a lot of Medicaid, and they paid you based on Medicare revenue of 2018. What they did was they said, okay, what data do we have on hand right now? We want to get money in the hands of providers right now. What do we have on hand? Oh, we have 2018 cost reports. Let's go with that. Mind you, we're talking about HHS. We're not talking about the IRS. So IRS had your tax returns. HHS only had your Medicare cost reports. So if you're a provider that did a little bit proportionate to your whole business, you did a little bit of Medicare, you did a lot of Medicaid and other and private duty, they paid you on 2% of your Medicare reimbursement from the 18 cost report. Then they opened up and said, oh, well, there's all these other providers that got missed. Okay, please go in and just, you're not even really applying, but we need you to give us your tax return. And we will pay you 2% of your net patient reimbursement. So then there was payments made based off of that. But there were also targeted distributions, targeted to Indian clinics, to rural health clinics, to SNP units, to just various, where it's very clearly spelled out, maybe some testing facilities, there might have been some of those. So you need to know where your distribution came from. If it wasn't something specific, then it was the general distribution fund. So that's when your reporting dates are decided. That's not true. That's what reporting requirements are decided based on what distribution you got your money from. The due dates are based on when did you receive it. It kind of is going by calendar quarters, roughly. We'll get to that a few slides in. If you received multiple distributions, then it appears that you can do one report for everything. And if you received them in separate reporting periods, you could elect to report separately with different due dates. Again, we'll get into that a little bit in more detail in a moment. In the date in which funds must be spent, and I'm going to apologize right now. I sent out an email saying, hey, you have to spend all your funds by June 30th. That was a generalized statement. For most of you, it's by June 30th this year, like next week. What would that be? A week from today. If you received your funds later and you received like in phase 2 or even phase 3, there was a phase 3 distribution, which was in December, like November, December, you have much longer to spend those funds, okay? So a little bit of clarity there, but still for the most part, most of you have until next Wednesday to spend your funds. Oops, there we go, okay. The reporting requirement is if you receive $10,000 or more during a single reporting period, but in aggregate, then you're required to do reporting. I don't have a great timetable, but let's say you received $8,000 on April 10th because you are a Medicare provider, but it's a small portion of your business, you do a lot of Medicaid, and then you received another 100,000 because you said, hey, here's my tax return, I need more money. And they give you another 100,000 on June 15th. Well, that is in one reporting period and it aggregates more than 10,000. So you're going to be required to report for that period. again, you want to track date, amount, and what type of PRF, Provider Relief Fund, right? Because that's a mouthful. It's also, you guys, in case you're not used to that term and you're wondering what I'm talking about, a lot of people have referred to it as HHS stimulus, because that's what it really said on the deposit when it was deposited into your account, I believe. So HHS stimulus, HHS funds, Provider Relief Fund, PRF, those are what they've been referred to. So like I mentioned previously, the reporting will all be submitted to and managed by this HRSA. They're the ones that recently sent out emails. I will note that those emails also went out in different tranches. My nursing home providers got theirs like 2 weeks ago. Home health got theirs last week or even this week. So I noticed there was a lag in time on those. It does state that funds will have at least 12 months and up to 18 months to be fully spent. We'll get into that calendar here in a moment. And the payment is considered, quote, received, either on the date that the deposit, that the ACH hit your bank account, or the date that the check was cashed, if you received a live check. Now, I also noted this off of the most recent email that was sent out, that providers must follow their basis of accounting to determine their expenses. And so that means you need to be careful about trying to be tricky between accrual basis and cash basis. If you run your expenses on a cash basis normally, then they're probably not, then what they're saying is, okay, you can't just accrue expenses for that and then pay it later. So for instance, well, let's use this as an example. The fee to do the, like, let's say you hire us to do the reporting and we charge you a fee. A, that fee is allowable expense, but B, you can't say, oh, well, I paid it in July when they did the reporting, but on accrual basis, and therefore it was for an expense back then, if you're not really accrual basis. I would be very careful on that. So, and I say I would be careful because they specifically stated it. Then it also says, and we've been seeing this all along, funds may use funds for eligible expenses or lost revenue incurred prior to receipt of the funds. That's a big thing that I think a lot of people are overlooking. And I totally get it, right? Because that's kind of contradictory to the first bullet point. But what you might be overlooking is you didn't get money until April, May, June. Pandemic was in full effect at that point. And you may have in March or even February or January seen a problem and start stocking up on PPE or any of those other things, right? Depending on where you're located, all that. HHS is saying, no, we expect that you're going to basically reimburse yourself for expenses you paid prior to receiving the money. Now, it does go on to say, as long as they are to prevent, prepare for, and respond to coronavirus. That's the key. That's the best guidance we have. That's not the best. They did give a little bit more detail than that. Now, it does give this little qualification. They do expect that it would be highly unusual, not disallowed, but highly unusual for providers to have eligible expenses prior to January 1st. So it kind of depends on, again, where you're located, what was going on. I know my experience, my family is all still in Oklahoma, and I know in Oklahoma, there was a lot of flu-like cases going on in December, but everybody was testing negative for flu, so they didn't know what it was. We think that's what it was, right? So I would go back to at least January 1st. If you were in an area that got hit hard and something was going on in December, I don't think it's that far of a stretch to actually include those expenses as well. I think you just have to have a really strong documented argument for it. Reporting is required for all recipients of a PRF, either general fund or targeted distributions. And I put this bullet here, including the nursing home confection control distribution, because I think that was formerly excluded. I think, don't quote me, but I think that's why they highlighted this. Also, they've already changed the name of it. But if you're a nursing home provider and you got things in this, nursing home infection control distribution, that is included as well. it says requirements do not include the rural health clinic COVID testing program, the claims reimbursement from HRSA COVID. See, there's a typo. That should not be equal 19. It should be -19. Uninsured program. And then the HRSA COVID Coverage Assistance Fund. None of those, you don't have to do reporting for those. All right, at long last, I do not believe in recreating the wheel. And so therefore I copy and pasted this directly from the guidance put out, because it's just a nice format. So here's what we're looking at. Where did I get my little pointer? Let me get my little pointer. Okay, period one, so they've established 4 periods. Period one is not an exact quarter, but like I said, April 10th was that first distribution date. So from April 10th to June 30th, which is essentially April 1st would have been the quarter, nobody received it, so whatever, it's basically quarters. For that quarter, the deadline to use the funds is this June 30th of this year. The reporting due date, reporting portal opens July 1st, and the report is due September 30th. So they did extend out the due date. Originally they had it due by July 31st. And they originally were only given 30 days to get your reporting in, which was insanity, considering that we don't even know what the reporting looks like still. Let me clarify that. We still do not know what the reporting looks like. I am not privy to any information that you are not yet privy to. So come July 1st, I will be finishing cost reports. Hopefully they're due July 31st. I actually will be finished on July 2nd. I am taking a 4th of July break for Saturday, Sunday, Monday. I will be back in the office on Tuesday, July. I think that's going to be the 6th. And that is when we will get logged in and start figuring out what is in that reporting. So please don't ask me for them because we don't know. That I think is going to cover majority of the providers. Now, there are some that you didn't get money until July or later. Your reporting, if it's from quarters 3 and 4 of 2020, like calendar quarters, it's due, you're due to spend the money by the end of this year. So you have all the way until December of this year to spend those funds. And then that reporting will be due March 31st of 2022, next year, first quarter next year. I don't know anybody that received any money since December 31st, 2020, but apparently there might be some funding happening. Period 3 is, and so I really shouldn't say it's actually calendar quarters, because this again is period 3 is quarter 1 and 2 of 2021. You have until June 30th of next year to spend any money if you get it in the first half of 2021. And then the reporting is due 3rd quarter 22. And then last but not least is period 4, second half of 21, if you get funding then, which to me is kind of telltale. I mean, that kind of tells me there may be more distributions coming. That spending is due by the end of next December, and the reporting would be, I love this, the first quarter of 2023. I giggle because staffing has been difficult for our firm. Part of it is, oh, we got these PPP loans, they're going to be short-lived, we'll do the work, then they're done. And so we put it all on Courtney and the team, and everybody's been helping out. And it's like, then round 2 came. And now there's forgiveness and forgiveness round 2. And now this reporting is going to last until 2023. So I might as well just staff for it and then figure out what to do when that reporting's all done, I guess. I'm not sure. So I don't know anybody that falls into period 3 or 4 at this point, but there must be people. So if that's you, you're going to be looking out for these dates, right? So everybody just be really aware and make yourself a chart of any distributions you got from HHS and this provider relief fund and figure out when your reporting due dates are. Now, I would say if it were me, pardon me, you know, and I'm trying not to be biased, but if it were me, if I got a distribution in period 1 and a second distribution in period 2, unless I couldn't spend it all yet, but if I'd spend it, I just want to do all the reporting and just get it done. That's my opinion. But if you need more time spending it, then that's why you've got this whole extra period of time to spend it. So I do know providers that got distributions in July and August of last year. So they now have longer to spend that money. All right. The portal. So the reporting portal is open for registration only. They do say it takes about 20 minutes to register, and they say that you do have to complete it before you save it. I don't think it's when you can do part, save it, come back later. It says you need to complete it before you can save it. It will, as I mentioned, it will open for full reporting on July 1st. And then at this time, again, I'm stressing, we still don't know what the reporting looks like. I do remember earlier guidance that said, that alluded to the reporting is going to be basic, almost like a spreadsheet or fill in forms. And you're not going to submit a lot of documentation with it, but you're required to have all the documentation. I would approach this reporting as if you know for certain it's going to be audited. I think the audit is going to be, I think the audit percentages will be high. I think they will do a lot of audits because they know that you also were exposed to getting PPP-1 loans, PPP-2 loans, you know, other CARES Act credits that were out there, payroll credits. There was a lot of money being put out there. So I really do think they will audit these at a high rate, percentage rate. So I would just prepare that you're going to be audited. So anybody got questions over that just yet? Mary, we will have the information from the webinar. It will be available in PDF. It'll be sent on a follow-up email that will go out tonight. So, I mean, I'm sorry, tomorrow. So watch your email for that. It actually comes from Zoom, if that matters. And it's automated. You're welcome. Okay, so I don't see any other questions. We'll just keep cruising along. So provider relief fund, HHS stimulus payments. Okay, this kind of is my original presentation, right? I'm going to kind of go back. These are things, if you've heard it once, if you just wanted that reporting update and you want to drop off the call, it's not going to offend me. It's not going to hurt my feelings. And not very bad. I understand people don't just like to hear me talk. I have a very scratchy, raspy voice. I get it. But I've added a little bit. So I don't know how much you want to hear. Regardless, going back to the beginning, I will not forget April 10th. I won't relive my story, but I was meeting with a bunch of CPAs and had to drop off the call. We were on a Zoom call and I said, guys, I got to go. Something's blowing up. People were texting me, hey, I just got a bunch of money in my account and stuff. That's when that all happened. And to be very transparent, we were so hung up on PPP loans because of that CARES Act of like 890 pages, first 60 pages were all PPP loan. That's as far as we got. We didn't even see this provider relief fund that was in that exact same legislation. So when the distribution started hitting, everybody, you know, went kind of crazy. It was fun. So they continue to roll out money, apparently. Now, terms and conditions. When you receive money, you do have to sign these terms and conditions that basically state the COVID funds must be used to prevent, prepare for, and respond to coronavirus. And then we're kind of left to our own devices to figure out what the hell that means. And so we've put our interpretation on it. I've gone conservative on some stances. There are some stances you can go more liberal with, and see where it goes. They're not well defined. They are putting out more and more. I have promised, I know for almost a year now, I will be putting together um, for my training session before then, I will have it ready, a fact sheet, like a one pager of just ideas of expenses that could be considered allowed. I'm gonna put a big fat disclaimer, just because it's on there doesn't mean it's necessarily allowed. It has to be COVID related, but I'll give you some thinking points to brainstorm on and think about. And we will get that put together. So you can also use it. So it's gonna be expenses directly related to and incurred because of coronavirus. Here's how I think of it. Think back in the day when in the accounts payable department, you had a stamp that said posted or any kind of, entered, and you like stamped it entered because you knew that was entered in the system and needed to be filed away. I think of that with COVID. Like you had an expense, could you stamp that invoice COVID or even part of the invoice? This is COVID related. That's what you want. That's how you want to think about this. Also, there's this huge component called loss, a replace of lost income, lost revenue. So it's designed to replace some of the lost revenue you may have experienced. And we'll get into how to calculate that or what that means. And then how do you prove and document these? And this is why I say I really want you to go into it with the assumption that you are going to be audited. I think that's really important because you're going to want to document everything that you do. Some of this is a little bit of a repeat. The due dates are based on when they were spent. There's new due dates of when the funds have to be spent. But I do want to point out, we do not like this word recoup, right? Oh, on the road. We don't like that word. And they say any funds not used inappropriately can be recouped. And it later, I think I quoted, it also says if you don't meet the reporting deadline, then funds can be recouped and can be considered to be used inappropriately. And therefore, it states that you're not in compliance with the terms and regulations, which therefore means it can be recouped, right? So definitely want to abide by those reporting deadlines. The PRF money cannot, this goes for any money. There's no money that's been put out there that can be used for the same purpose as another money. So the PRF money can't be used for the same thing that PPP money was for. And they're kind of taking this to a new degree where they're saying that PRF funds cannot be used for something that another program is obligated to reimburse you. If you're a Texas waiver, PAS provider, and you participate in rate enhancement, there's a lot of question about that. So rate enhancement bonus, you pay, you call it a COVID bonus, but you also include it, it gets super sticky because then is HHS, not HHS, but the state, the rate enhancement program, obligated to reimburse those costs? It gets super sticky. We don't know the answer to that. What I'm going to direct providers to do is really try to find as many black and white, cut and dry expenses, lost revenue to document so that it's just, you're that much more solid, right? Like you can really sleep at night and not say, oh, I hope they accept my argument about those bonuses, that kind of thing, right? And they do reserve the right to audit recipients in the future. And like I said, I expect quite a few audits. Merlita, the final date for submission of PPP forgiveness applications is very loose and it's kind of driven by the banks. Technically, it is supposed to be 10 months after the end of your covered period. That is a very loose, it's not very well defined. And then what happened is that period hit for people that got early PPP loans right in the middle of PPP2, and banks just put forgiveness on pause. So definitely reach out. The short answer is reach out to your lender and find out what the due date is. It's going to be specific to your loan. There is not a global specific due date. And I think a lot of banks have gone with a lot of leniency on that because of round 2 coming into play, which was not originally designed. What if you have more expenses than money received until which date you can count the loss? Okay. So no, great question. If you have more expenses than you received in money, you keep recording them as HHS expenses. The reason why is they're talking about more distributions of money. So my thought would be you want to track those now because they may come up and say, okay, hey, we've got another round of funding for those that have more proven expenses than they had in reimbursement. We don't know, but let's prepare for it. Lost revenue, there is no, well, the lost revenue, it's going to go with your date of disbursement, right? So when you receive the funds, whatever use date that, okay, let's say it was in that first period. I'm going to back up real fast because I think this is a really valid point to talk through. Okay, if you, let's say you received money in this tranche and this tranche only, or this period only, then the lost revenue calculation can be through this date. So you can track lost revenue through June 30th. What I plan on doing, let's say you had $100,000 that you're trying to justify, but you can justify 300,000. By God, we're going to justify 300,000, and we're going to, depending on what the reporting looks like, we're going to be ready to report it all because we want to be able to show what their true impact has been. So I hope that answers that question. Merlita, I'll put you in detention later. She logged in late. It's okay. So that slide I was just on really goes over the due dates of the HHS Provider Relief Fund, and it's based on when you got your money. Most of you, if you got your money by June 30th of last year, you're reporting your use of funds, they have to be spent by June 30th this year. So that's next Wednesday. And the reporting is due July 1 to September 30th. Okay. So, okay, let me take some of these as answered. Next question. Mary, about the IRS, are these funds taxable? It is later in the presentation. I'm happy to answer it now. It is. They are. You really, we're reporting, most of our taxpayers are cash basis. They are paying tax on the funds received. It's never been in question. They're not going to reverse that like they did the PPP loan, which is not taxable, but this is taxable income. Okay. And we're recognizing it in the year that the money was received, not necessarily justified and spent. Now, you can make an argument for that. If I'm not your tax preparer, discuss it with your tax preparer. They may say, I can also see the argument, especially somebody that got a lot of money that says, look, you know, we got $500,000. We're only going to be able to justify 200 of it. And we plan on giving the other 300 back because that's an option. There are many people out there that are like, I can't spend this. I don't want the liability. I don't want the responsibility. I just want to give it back. That's allowed. There are instructions on returning money. If that's the case, I would only include in, I would be careful and probably only include in taxable income the amount that you're going to justify as spent and get. It's not forgiven. It is a grant already, but so it's a grant. You're expected to use it all, but if you don't use it all, you give it back. So the negative is the way I'm doing it, we're including as income for 2020. And if you end up giving some back, then it will be a deduction in 21. And you really need to visit about that with your tax preparer and their comfort level. All of our clients have been like, I just want to pay the tax and be done with it. We're going to spend it all. So that's the approach that we're taking. All right, let me get through a couple others here. Oops, got When we signed up for PPP loan, they asked about our lost revenue and we received funding based on that. Okay, this is a good question. I hadn't thought about this perspective. Can we use funding from HRSA based on lost revenue, or is that not safe to do? What this attendee is saying, anonymous, what they're saying is, hey, when we got our PPP loan, it was loan 2, probably loan 2. Because loan 1, you didn't have to show a decrease. Loan 2, you had to show a decrease in revenue versus 2019. So that's kind of lost revenue to justify the PPP loan. That's fine. This is not the same thing. It is kind of the same idea, but it is not crossing over. That was just to, the PPP loan was to pay payroll expenses. And just because they use that criteria to measure, that they use that criteria of loss of decline revenue, because they're trying to find out who was really impacted by the pandemic. Let's give them extra funding. And that they had to have some kind of eligibility criteria. That's what they went with. That is different. HHS is saying we want to replace some of the lost income. And so that is different. And we'll get into that. If my PPP forgiveness timeline ends October 1st for wages, can I use PRF money for wages beginning November? Yes, Connie, although I am taking the stance that straight payroll is not an eligible expense, because you pay payroll anyways. You would have been paying those wages regardless of the pandemic. There might be specific wages that could be eligible, but general payroll to me is not an allowed expense. If it was, we wouldn't even be having these webinars, because everybody could just cover payroll with it and walk on down the road. I don't think that's an allowable expense. Can we expand? Can we use the fund to expand and renovate new office space and purchase office equipment due to COVID? Yes, let's get into that in a little bit. So that clears those questions. Let's jump into that, like what is included. So I'll kind of breeze through some of this. There are some links of who's required to report. This is new. So first of all, they put out this one pager, and I am tempted to share it with you to show you how, should I say it like this, how lame it is. Let me see if I can share it with you real quick. Where is that's PowerPoint. Oh, I don't have it open. Where's my website? Well, I said I had all this open. I don't have that open. I feel like I closed my web browser. That does not sound natural. Here it is. Well, sorry, I'm scrambling around here. I shouldn't have this open. I wasn't sure if I was going to share it, but I think it's relevant. All right, team, can you see this one pager? Can somebody tell me in chat? Yep, okay, good. This is what they put out. I really kind of expected more. This is just, it's a one pager. I mean, it does give some examples, and I've got them repeated in the in my slides. I actually cut and pasted, not from this document, but from previous documents, what is included. And so it's pretty, I mean, it looks, if you just read it on the surface, it looks like, oh, I can include rent, I can include everything. But we've got to go back to, let me go back to PowerPoint, the presentation. It's not the one I want. Here we go. Because it's not really that cut and dry. Well, okay. Because they added this little section right here. And we're back on PowerPoint, right? Somebody tell me if we're wrong. When considering if an expense is allowable under the use of funds policy, ask yourself this: is the expense necessary and reasonable to support patient care efforts to prepare for, prevent, or respond to coronavirus? And is it incurred consistent with your organization's policies and procedures? So the first book, this is it necessary and reasonable, to me is the key. So you were already paying rent. and that is necessary and reasonable, but was it incurred due to COVID? You know, to me, this almost creates even more gray area around a lot of the plain vanilla expenses. So I wish I had a magic crystal ball and I could read in it and say, you know, what is allowed and what's not. I think that if you do here's a renovation to expand your offices, because you just grew a bunch because somebody next to you went out of business because of COVID and you were taking on patients because of it, to me, that might be allowable. But what if you're expanding your office to give more distancing between cubicles and everything? I think that's completely legit. The thing is, you would not have done that had COVID never surfaced. You did it because you wanted to space out your office staff a lot more. So you had 4 people crammed in one office with some little cubes and use that. That's obviously not acceptable. We need to expand our space. To me, those renovations are completely legit. Now, when I say that, I give you this caveat. Document the hell out of it. I think this is where you want to open and do like a Word document, like a narrative. Maybe it's a board of directors minutes or a PAC minutes or a, you know, just a manager's meeting or executive meeting, what a leadership team, whatever it is that you do. Even if you don't normally do those things, do it for this and formalize it, right? You say, we, the board or the ownership, we've reviewed the rules. We are making this change because of COVID. We need to social distance our staff. They need to be in the office. We've got caseload patients to handle. We are an essential business and we need to expand our space. We're going to rent the space next to us. So here's an interesting, what if you're in one of those big buildings where it's super easy to just assume the space next to you, they knock out a couple walls, change some doors around and reconfigure it. And you only did that because of COVID. And let's say your rent went from $2,000 a month to $3,000 a month. I would easily justify, or I feel like I could easily justify the cost of build out and the increase in rent, because you would not have expanded if it weren't for COVID. So that extra $1,000 a month rent, to me, that's legit. So see, the circumstance around the expense is far more critical than the expense category itself, because they pretty much covered any category as long as it's COVID related, which is kind of what that one pager was like. Okay, well, that's all categories, but it's got to be COVID related. And they did add this language right here later on. So I would be careful. Now, here's where I just copy and pasted a lot of information. Healthcare related expenses. Again, it's not reimbursed by any other fund or nobody else is obligated to reimburse. But then also this lost revenue. And then they go further into the expense side and they break it down basically between healthcare expenses and other expenses like A&G. This is just some data elements that you're going to need to report on. I try to put everything in here because I want you to be able to take this away and use it later. I'm not going to read it to you. And I hope I didn't need to update this. Okay, there is a little bit, if you receive less than 500,000, your reporting is a little bit simplified, but even over 500,000, it's not complicated. There's a general payments, there were targeted payments. Depending on what kind of payment, that drives at what level do you report the funds. If you're a big conglomerate and you got a parent and then you've got several providers, or that's how you're structured, general payments are all going to be reported at the entity level. If it was a targeted payment, it's going to be reported at the subsidiary level. Say you're one big entity and you got 4 providers. If it was a targeted payment, it's at the provider level. If it's a general payment, it's at the whole entity level. And then again, for under 500,000, your expense detail is literally, you're going to report A&G expenses and related healthcare expenses. That's how you're going to segregate them, and that's it. If it's more than 500,000, you're going to take your A&G expenses and separate them into these buckets. Again, you're already going to have those buckets on your financial statements just for the smaller reporting. You're just going to add them up. Bigger reporting, you just leave them detailed. It's not, to me, it's not that big of a difference. So let's go through these. Again, mortgage or rent, insurance for malpractice, property, business insurance, personnel, workforce related actual expenses per, see, now this defines the personnel a little bit. So payroll, it says actually related to prevent, prepare for, or respond to coronavirus during the reporting period. It also can include training and staffing, temporary help. But again, related to COVID specifically. Fringe benefits that go with that. Lease payments, new equipment, supply, software, laptops, you know, a point of care, utilities and operations, and then other general administrative not captured above. Pretty basic. Now, the health, again, large reporters, so over 500,000, you're also going to break down your healthcare related expenses into these buckets, right? So you've got supplies, so all of your PPE, your hand sanitizers, your supplies for patient screening, for staff screening, equipment, ventilators, HVAC systems. If you put in one of those like air sanitizers, I know a lot of people bought molecules and like room air filtration systems. That would all be equipment. IT, technology, telehealth, EMRs, increased bandwidth. So if you had to up, there's another good one. You were already paying for internet, but wow, we had to go to Google Fiber. Yeah, we need a gigafiber or giga, whatever it is. And we increased and we went to fiber. And that increase, I would consider a COVID expense. Facilities, here is what we were just talking about. Any facility cost related to prevent, prepare for, respond to during the reporting period, such as a lease or purchase of permanent or temporary structures, or to modify facilities to accommodate patient treatment practices revised to COVID. Now, I stretch facilities to include office staff, administrative staff facilities, right? And then other healthcare related expenses. So that's what the reporting is going to kind of look like, is what we're expecting. I kind of expect it to be like an Excel spreadsheet, fill in the data and go on down the road. I don't know yet. I don't know what it's going to look like. That's just, I remember something back when, because it did say only fill in the reporting, do not supply any supporting documents, but you are required to keep them on hand, you know, for X number of years. So that's kind of what I'm going from. Let me go through more detail, which we've been doing, about these expenses that might answer some of the questions that are popping up. Supplies used to provide services for possible or actual COVID patients. They did further come out and say, if you're an agency that never witnessed COVID firsthand, no staff, no patients, that doesn't matter. You were still preventing it. You were preparing for it and you were responding to it. Just because you were fortunate enough to not have to confront it does not exclude you from these costs. Equipment used to provide services. So, you know, if you went tablets, if you already had tablets, it's kind of hard to say, oh, I did that for COVID. We already had them. Workforce training, all of these webinars, all the education, all the legal fees, accounting fees, consulting fees, any kind of like compliance. If you had to hire a compliance officer, that is all legit. Again, can you COVID stamp it? Yes, then to me it counts. Developing emergency operations centers, reporting testing results. What about if you had to hire somebody to do contact tracing? All legit. Again, some of these are the same. And again, expenses should be after 1/1/20, but I think if you've got something relevant before that, it should be considered. Hand sanitizer, cleaning supplies. If you paid for a janitorial service to come in and deep clean, especially if you never had janitorial services and then you hired one to come in, and because I see the trucks all over town where they're kind of specializing in viruses now and everything, they'll come in and deep clean. Even if you do it weekly, to me, that's a legit expense. Overtime wages for those that had to cover other staff that were out due to COVID. Additional professional fees, HR issues. Everybody had HR issues. How do I handle this? How do I handle that? I would even consider if you went to a more robust payroll system to help you handle all of this, or a payroll provider that had HR consulting resources within, and you moved because of that. Like, I need more help with these HR questions that are coming up. I think that might be legit. Definitely additional hardware and software costs for work from home capabilities, for your admin staff, telehealth. If you bought Zoom because you're subscribed to Zoom because you never had Zoom before, any of that counts. Again, we've said training a few times. Now, before we jump into lost revenue, I'm going to go back to questions because we have quite a few stacking up on me. Let me answer these. We had to hire additional staff, special attendants to help us service PAS clients due to difficulty looking for attendants to work. Totally get it. We have received, most of them received stimulus money and they didn't want to come back to work and they were on unemployment. Can we use their payroll costs as expense? Let me think about this. Man, that one's tough. Here's what I'm envisioning. Let's say your normal staff, you pay $9 an hour for your attendance, and you had to go out and start paying $10 an hour for new attendants because your old attendants wouldn't come back to work, even for $10 an hour. Can that $10 an hour person be counted? I'm going to go conservative on this. I'm taking a conservative stance on most payroll related questions. I think $9 an hour would be the standard wage and not allowable, but the $1 an hour additional would be allowable. And what I would have done in that situation is I would have said our regular rate is $9 an hour. We are paying an extra $1 an hour because of COVID. And I would show that separately on their pay stubs. I would show, wages, PAS, $9 an hour, 50 hours. Wages, COVID add-on, $1 an hour. What did I say? 50 hours, $50. So they see separate line items. That serves a couple of purposes. It shows that you're paying that specifically for COVID. So therefore, I tend to want to count it in your reporting. It also sets the stage, and I know it's kind of late now, but if you haven't done it yet and you still have time, or if you can make changes in your payroll records, usually you can. But it also sets the stage and it sets the expectations for those staff that if ever this is gone and you get back to a place where $9 is the proper rate, then you can remove that $1 add-on if you call it an add-on and show it as an add-on. That's my 2 cents. I just think it would be easier to do it that to pull it back, right? It's hard to give somebody a raise and then take it back. Would headhunter fees, relocation, sign-on bonus be included? I love that. I had not thought about that one. Yeah, trust me, I know all about headhunter fees. Definitely relocation, definitely sign-on bonuses. And I even venture out to say headhunter fees if you haven't used them in the past, or if you were hiring a position specifically for COVID. Like if it was, we need a COVID compliance officer, or maybe you don't even call it that. Maybe it's an infection control officer. Then I think that's legit. That all came about because of COVID. I know this has changed many times. Is lost revenue reporting based on gross revenue lost and not reduced by any related wages and payroll taxes? It is based on gross revenue. Expenses do not matter any longer, and we will get into that in a moment. Would EMR software fees be considered software lease? Yes, yes. And yes, lost revenue is based on 2020 versus 2019 or 21 versus 2019, depending on when when you're utilizing your funds, and we'll get into that. If we received our funding in August 20th, so our deadline to spend would be December 31st, 21. Reporting would be first quarter 22. That's exactly right. And I think I saw, let's see. How about COVID bonus pay for our providers? I completely think COVID bonus pay is legit. I would definitely hope that you call it a COVID bonus. That way it's just on payroll, super clear, and no question about it. And also, let me explain that also doesn't, I've been asked these questions about COVID bonus. It doesn't have to be equitable across everybody. It doesn't have to be paid to everybody. It can be paid to owners. It can be paid to execs. What you want to watch out for, say I'm going to pay, I need to spend $50,000. Oh, I've got two owners. They're each getting a $25,000 bonus. I wouldn't do that. But let's say, same example, I've got 50,000 to spend. I've got 100 attendants. I'm going to give everybody, oh God, don't make me do math in my head, a $100 bonus. And then that's all my attendants. And then my office staff, I'm giving $1,000 bonuses because they had to keep the ship running and never took unemployment. And then, you can and then I'm giving my owners, who also work. If they're just passive owners and are not working, I would highly caution against that. But that also work. And then I'm going to give the owners a $5,000 bonus or a $10,000 bonus or something like that. Like, I think that's legit. I just would try to be equitable about it, but it doesn't have to be even for everybody. It could be based on longevity. It could be based on who stepped up for you and went to battle, and who stayed in there, and who worked for you, and all of that. So it could be like, okay, we're going to do $100 per attendant for everybody that was with us through this thing. And because we just want to, but you know what? These 5 attendants right here never called in sick, never complained, always took extra cases on. I want them to have $1,000 bonus. Totally legit. There's nothing that says how to divvy that up. Mike Bowen. Hi, Mike. Vaccine clinics and home vaccine expenses applicable. Yes. I think all of that is allowable, as it did address those at some point. Is postage fees a covered item for all the mass mail outs we did on COVID? Absolutely. And the training materials. Okay. Courtney, make a note. We need to go through all of these Q&As to create our document list. I hope y'all don't mind that we steal some ideas about really good ways to think about what expenses to account. That's a great one I hadn't thought about. I know you had to do a lot of mailers on COVID information, training materials to employees, to clients, paper, printing, all of that would be included. Absolutely. Great thought. I have some questions up here in chat. Let me see what I can get. Gloves, masks, Clorox wipes, Lysol sprays were being purchased before COVID, but there has been yes. Okay, great question. You already bought PPE. You that was always normal. And I've been saying, if you did it in the past, don't count it now. I'm going to make an exception. If it is PPE, sanitation, cleaning, just because you were doing it in the past, now it counts. Even if you were already doing it, yes, it counts now as COVID because you have to do those things. Janitorial, that one gets a little foggy, right? If you already had janitorial services, you have somebody just come in and clean the office, to me that doesn't count. But if you have them come do deep cleans, or you even changed service providers to one that does this like real sanitation, where they're like spraying, for microbials and whatever all that, is, I think that would be legit. But just your normal janitor coming in, changing the trash and vacuuming, I wouldn't push the envelope that far. Okay, hold on. We have coded all these purchases to a COVID department to accumulate, but it seems we should take a % of these costs to take into account that we were purchasing before COVID. If you want to be, so what they're asking is, okay, if I used to spend $100 a month on these PPE and cleaning supplies, and now I'm spending $1,000 a month, should I take my current expenses and exclude 10%? Because that's what I always used to spend. If you want to be super conservative, that's an easy way to, it's a very legitimate thought. I don't think I don't plan on doing that, but I also plan on capturing every single expense I can in case some do get disallowed for that very reason. Let's say you get audited and they come in and say, hey, you're claiming all cleaning supplies now, and we know that previously you spent about this much per month on cleaning supplies. We're going to exclude that much from COVID expenses. I want to have buffers to account for those things. So with our clients, we're not saying, okay, oh, you've justified your 300,000, no more reporting. We want to keep going. And I have a group, and I want to make sure that I tell them, because I can't remember, I know they asked the question and I said, no, you can quit tracking it. If I told you that, I'm reversing that stance, especially seeing that they're talking about further distributions through the end of this year. Let's keep tracking all of that. I'm reading another question real quick. You talked about normal salaries not being reportable. On our provider company side, we created a 2-person staff to actually call our clients, get temperature checks, ask all the questions, yada, yada, yada. Wouldn't these be reported? Yes. So Debbie, what my advice on that was, you've basically created, you have 2-person staff that's all they're doing is COVID compliance. I would create a separate pay wage item for them. You don't have to, right? You're saying, oh, I've been paying them for a year now and I didn't know I needed to do that. That's okay. It's okay. I just think it's easier if in the payroll records, you got wages regular, and then you have wages COVID. Let's say you didn't do that. Make sure you have a job description that says your sole responsibility is all this COVID compliance. Then that full salary to me is deductible. Full salary deductible. Salary, benefits, taxes, all of it, because you would not have that position without the pandemic. Okay. I can't see my time. 11:02. Courtney, is my screen still frozen? I haven't really gone anywhere for it to not be. What about providing meals to our staff? That's interesting because we've done that as well. When this all broke out, we had half of us in the office because we wanted to be in the office, and we were the COVID task force. And we've started bringing in meals every day because we were just so busy we couldn't get out for lunch. And it really, it has stuck. We enjoy it. It gives us great little team time to build and bond. I think if you can put a narrative with it that you're doing it similar to, like, because you're short on time with everything that everybody's trying to get done, then I think it could be justified. And then Debbie says she does have it COVID labeled, so that's awesome. I just think in the payroll system, if you can label something as COVID, I think it's going to make it so much easier for you to justify later on down the road. I just hid my chat and I lost it. Okay, there it is. Yes, the image of you is frozen. The image of me is frozen, but I haven't. Okay. Well, I hope I don't have a weird look on my face if my image is frozen. I don't really know what to do about that. You know what? Let me stop sharing. I'll reshare it. Oh, I have to stop sharing. We'll see if this doesn't jog it real quick. Share and then give me back. Okay. I don't know if that helped or not. Couple more. When it comes to EMR, is access software allowed? So again, this one's going to kind of go back to if you were already using Access, yes, that's an EMR. Is it allowed? I mean, if you were already using it, I don't feel like it is. If you had to upgrade to it, let's say you were doing DDE or something manual, then maybe, but I find that would be one of the last that I would try to justify with. So I'm going to kind of stand on the no side of that. We lost an employee for the PAS and can use HHS funding to supplement the owners for taking over that unanticipated workload, working 12-hour shifts. Again, I would go back to, I would add a COVID pay item and show that. So like if the owner has a regular salary and then they're working all these extra hours, I would pay them that as a specific COVID pay item to absorb that work. But yes, I feel you on that one. If we paid staff employees when they went to get their vaccine 2 hours, can we include those wages paid? We also paid employees if they were out for quarantine. Does that count as well? If you paid staff while they were out on quarantine, I think it counts only if you did not also claim the tax credit for those wages. That was in that very first, before the CARES Act, the Family First Coronavirus Act had that extended or emergency paid medical leave act, where if they were out on quarantine for one reason or another, you pay them and then you get reimbursed through your payroll tax credits. As long as that is not the case, if you can't, that's double dipping. So if you didn't claim that, then yes. And can you pay them to go get their vaccine? I might be a little aggressive, but I think I would probably do that. That's COVID related. So I think you're okay there. If we pay a COVID bonus, would these be excluded from our payroll costs on our Medicaid cost reports? I'm just going to say, I don't know the answer to that question. I'm sure you're getting at it from a rate enhancement stance. I don't think it should be excluded, but I don't know. The state has not been clear with that yet at all. And well, let me back up. The state is saying that is another fund and it should not be included. The state is saying any funds that you're using from HHS and you're justifying HHS funds by paying attendance should not be included as attendant compensation on your rate enhancement report or your cost report for next year. That may change, but that's what they're saying right now. I think they're kind of bullies because that's not what Medicare or anybody else is going with, but fix. Okay, yes, that seemed to fix my problem with the things freezing. Okay, let's move on. Let's go through because we are running out of time. I don't want to keep anybody. I didn't think I had enough material, but we've had lots of questions. That's good. Lost revenue is defined as prior to netting with expenses. I kind of froze for a minute because I thought I forgot to fix that language. If you don't know, lost revenues was defined last June, July, and then it went through all these changes to just be reverted back to the original definition. I am going to kind of skip through the slides. Because I don't even know if this bullet point is actually, true anymore. I don't know that it's capped. Lost revenue is, to me, it's not quite as gray as the expense side of it. Lost revenue, you can do a myriad of things to calculate lost revenue. And I no longer have my other slides up to see what's coming next. I apologize. You're comparing back to 2019. So it's either 2020 or 2019. I mean, 2020 or 21, both compared back to 2019. If you've just straight up declined in revenue, that's the easiest. Plain vanilla, straightforward, black and white. But what happens when you were accelerating, right? So you're on this growth trajectory and then you dipped, but you didn't dip below 19, but you dipped. And you dipped considerably, but it still wasn't below 19. They put in language to account for that. You can calculate lost revenue based on, let's say you had a budget. If you had a budget to actual and that Actual comes in less than what was budgeted, that counts. And it's month over month. So let's say June 2020 budgeted numbers were down $10,000 versus what was projected. So actual was down over budgeted numbers. Well, there's $10,000. And then July, let's say July was over by 1,000 because there was a reprieve for a minute. And then, oh, wow, we had another spike. August is down 20,000. Then there's a $20,000 loss in revenue. My stance is we're looking at it period by period. We're not looking at the cumulative. We want to see real, now we're not doing day by day, but month by month. If you use a budgeted number, we're going to look at it month by month. How did each month perform? So let's say June down 10,000, July up 1,000. So that's a net of 9 down. I'm still counting the full 10 that June was down. And then let's say August is down another 10. So I've got 2 months that were down 10,000 each and 1 month that was up 1,000. So that's 2 months down at, that's 20,000. 1 month up is 1,000. It gets disregarded because it was up, but the 2 months that were down get counted. So that's if you're doing budget versus actual. It does state that the budget has to have been in place and signed. Okay, it's not on here. By March 26th or March 27th, one of those 2 dates, 2020. So if you're one that runs a budget, that's just something to keep in mind. And then, but we can also go, and I did a whole nother presentation. If you want to hear more detail about lost revenue, go to YouTube, find my webinar. It was HHS Provider Relief Fund update. It was late July, and it was myself and AlayaCare. And we go over, like, you can even skip through until you get to the lost revenue part. We go over lost revenue in great detail. But you can count things like, let's say you usually average 100 episodes a month, and then you dropped to 80. Oh, there's a drop, right? Let's count that. I can say I've been averaging 100 episodes a month, and I dropped to 80. Then I just dropped 20 episodes. What's my average reimbursement per episode? $2,600 times a drop of 20. There, you just quantified a loss in revenue. So you can look at missed visits. They can be super specific to where in your EMR, you've tagged it COVID, 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 you know, refused service due to COVID. PAS providers, this is big for you guys. How many clients didn't want you in their house, wouldn't accept your services? Tag them. Let's say you had, you know, Susie Q on service. She's been on service for years. You've always had an authorization for her. She usually gets 20 hours a week, and she's terminated services for a 3-month period. All of that counts, and that's super clear, clean cut. There's no question about that. What's the daily rate that you get paid for them, or hourly rate? It's totally legit. So lost, a decline in episodes, decline in hours of service, specific episodes ended because of COVID, specific patients that went and said, we don't want any more service, PAS clients. Maybe it's a referral source. Maybe your referral source had to totally shut down. What if you've got Dr. Z who does knees and hip replacement, and all elective surgeries were shut down, and he sends you 10 referrals a week, and that got shut down for 6 months. Well, that was very consistent. You can show a consistent pattern of 10 referrals a week from Dr. Z, and it went to 0. What did those 10 referrals a week, what was your conversion rate? 100%, 80%? So out of the 10 that were referred, you took 8 every time. And those 8 were worth $2,500, $3,000. Quantify it out. I recommend that you do as much in an Excel spreadsheet as you can. Put it in there, slice it, dice it, put it all in there. And then if any of it needs explanation, document your explanation in some sort of narrative. Stepped away, our COVID hours when they are out for quarantine, a covered cost. It is if you did not take a credit from the IRS to pay for that person while they're out on quarantine. So be careful with that. Can we compare revenue from 19 to 20 if there's a loss? Can we claim that figure on the report? Absolutely. It can be as straightforward as here was 19, here's 20. It could be a total for the whole year. It can be month by month. Well, I say that again, we don't know what this reporting looks like yet. We're going off of the information we have. So until we see something different, we'll stick with that. I think you can justify it month by month. That is the end of lost revenue. There is a lot more about that. I do plan on, when we have our training session on this, we'll go into a lot more detail. Well, I hope we know a lot more at that point, and then we can spend more time on that. Real quick, these are just some additional metrics that are going to be, you're going to have to report in there, change of ownership things. Tax treatment, again, it is taxable income, and it's not worded that way. It's worded that you cannot deduct the expenses paid with that money. It's taxable income, okay? Let's see, cost report. It does not, Medicare cost report, it does not offset your Medicare cost. It just gets reported on a specific line for the cost report. Document everything. I mean, I'm talking like old school. Medicare's coming in to do some audits. You need invoices, you need receipts, you need explanations. A credit card statement is not a receipt. You need a receipt from the actual vendor. Document, document, document. This is where it said there will be worksheets to be provided, or that's what we're going to report based on. So we'll see what that looks like. All right, here are some forms and resources. I want to talk just a minute, if we can. Can you show again the slide of deadlines? Yeah, let me do that actually. Let me go over this, Francis, real quick, and I'll jump back to that beginning slide so y'all can study while I tell you what we're doing for services for you guys that might be interested. Real quick on resources, I've got links to the actual, and it's so easy, but maybe it's easy on my browser because I've been doing it all the time. If you just Google Provider Relief Fund, you will get the website. They've done actually a good job. We've got linked to the FAQs, tons of FAQs. If you've got a very specific situation, I recommend you go to the FAQs. Lots of information there. When I say specific, like, hey, we didn't own the company in 19, we bought it, it was an asset purchase, or what if we weren't in business in 19? It's all specifically addressed. So then we're going to do an online training, and I'll get to that. Let me just go back to that first slide for the, there. So study that for your reporting. Again, this is the period that you receive the money. Here's when you have to use it by, and here's when it's reported, okay? For services, what my team and I are going to do is we've got two options pretty much. I am going to do a full in-depth training class. We are going to charge a fee for it. We're charging $2.99 for this webinar. I will make it as interactive as I can. And I will also be providing for anybody that registers for that training session. I don't even want to call it a webinar. I want it to be a real training session. I'll provide any of the workbooks that I create or any of the tools that I create to do our reporting will be provided. It's going to be virtual, online through Zoom. The link for registration is already out there. It is in, we've sent it out a couple of times, and it is in this PowerPoint presentation. It is on our events page of our website, and then we will send more emails out about it. Again, it's going to be July 14th. So that's Wednesday, 3 weeks from today. It gives me 2 weeks to get in and really understand what the reporting looks like. It really gives me about 10 days. But like I said, I do this stuff as it comes about. We will figure out what the reporting looks like, and we will be doing this live training to really try to help anybody that wants to be able to do it themselves. So the idea is that you walk away from that training session with everything you need to know to do the reporting yourself. Now, with that, I've got to put a disclaimer. If that's the path you choose, unfortunately, we are already overwhelmed with questions. I am not going to be able to answer questions via email anymore. They're just a lot and there's only one of me. And right now I'm trying desperately to finish Medicare cost reports so that I can then get onto this. But so that is going to be a self-service tool and approach. And then we are doing a full service offering as well. We sent out an email about that last week. I think I sent it on Friday. That basically was a video message and said, hey, here's what we're offering. It also had a link to the engagement letter. And so you could just sign right up. Part of the pitch there was, hey, by the way, if you need to spend your, well, at that point I said, you need to spend your money by 6:30 because I hadn't seen these due dates hadn't come out yet. If you need to spend your money by 6:30, we are accepting engagements right now. I don't know if we will fill up. I'm trying to have as much capacity as I can to do the reporting. We've already had a huge response from that. But I basically said, look, if you want to sign an engagement letter now and pay us now, to me, that then gets included with your cost. Okay. So that would be a legitimate expense and be included with your cost and not be questioned on accrual versus cash basis because you've paid it and we've been working on it and we've been engaged. And even though the reporting is done a little bit later, to me, I think that flies. I don't know, maybe I'm just speaking. We also added on that engagement letter an option for PPP forgiveness if you want to kind of pay us to do that as well. So those can all be included as additional expenses for this reporting right here. So watch for those emails. Also on that final slide, it did say if you're interested in that service and you've not received one of those emails and you would like one, or you just want to know, you want the engagement letter, just email me, Amy, A-M-Y, sweet short original, at knightcpagroup.com, and I can send you that an email with that engagement letter link in it. It explains everything. It would be pretty much full service. Other than you will still have to go through and dig through your expenses and tell me what your expenses are. We will have conversations. We will have one-on-one meetings with everybody to make sure that we understand and we brainstorm and get all the expenses captured that we can. I've got a few more questions popping up probably about that. What if you hired a COVID compliance officer and he's a family member? Allowable, no problem. We lost about 25% of our patient census because we could not find staff. Yes, totally allowable. Thank you, you're welcome. I appreciate you guys showing up. Can you send me the link for reporting? I don't recall receiving it. I can, but you're listed as anonymous. So if you'll just send me an email, I can respond to it, amy@knightcpagroup.com, or put your name in here and I can send that. Will you be doing training more than once? Some of us may be in period 2. Debbie, I'm not sure about that yet. I want to say probably, but I can't promise it. And if nothing else, I could probably re-air it as long as nothing changes. So I'm not sure about that. And I know not everybody is going to be available on July 14th. It will be recorded. If you're concerned about just not being able to make that session, I will not broadcast it on YouTube because it is paid for, but it will be recorded. So anybody that wants to register, even if they can't attend, but they want to register, they will get the recording of it that way. So it will be recorded and sent out. Okay, guys, that is all that I have. Can I pay for HHS relief reporting with a credit card as I do other services for you? Oh, Brent, yes. And it's probably not on that form. It asks for ACH, but if you'll just fill in credit card info on that form, it's all secure. I can do it that way, or you can always call the office and we can take it that way. And actually, if you log into your account portal, and I don't know where you would find it, but there's a way for me to collect it that way as well. Anyways, and actually, Brent, we were just working on your cost reports this morning. So, okay, guys, thank you again, everybody, for showing up and always supporting me. We are all here to help and answer as many questions as we can and help everybody get through this time. So again, send me an email, if you want our help. And we will see you next time in 3 weeks if you're interested. And if not, I don't know what the next webinar is, but I'm sure we'll get one up probably for August. We'll probably get back on track. All right. Thanks, everybody.